Hey, good morning, people. Hello, hello. Yesterday we had the inflation data that came out, the CPI, everyone's favorite inflation gauge, realistically. But we didn't do a little YouTube update because we were looking to trade that into the session. Now, what had happened yesterday? Markets dropped very drastically, right? S&P, Nasdaq, everything across the board dropped fairly drastically after that news of the hotter CPI that came out, hotter inflation print. And yesterday, throughout the session, there was a decent bit of downside, especially into the end of the session. But not all, but most of it was erased as we closed out the U.S. trading cash session. So let's talk a bit about that. Talk about a bit about other things as well, and we'll go from there. So the CPI yesterday missed across the board, right? The inflation readings came out slightly spicier than expected from many standpoints, right? The year over year, the month over month, the core, the regular, so on and so forth. So what happened yesterday, they dropped pre-market pretty aggressively. Like the futures were dropping in that consumer price index report that took some of the steam out of the powerful Wall Street rally that has been in place since the end of October, right? We've been rallying pretty viciously and all dips were getting bought up. And yesterday into the end of the day was not anything different. So the Dow Jones recorded its worst day in nearly a year, and Treasury yields jumped after the January core CPI accelerated by its biggest margin since May 2023. It might be long overdue, but with the selling taking away some of the market froth, futures are higher again pre-market, right? We'll take a look at the plan, and we'll take a look at what this looks like, right? Potential bear trap, maybe. So we've been saying this for several months, right? Realistically, this disinflationary process is going to take a while, but has generally paused. Adding that the Fed must shelve any rate cut plans for now. The probability of the rate cuts for March dropped drastically to uh, correct me if I'm wrong here, but I believe it's under 10% at this point. Just a few months ago, it was sitting at 70% for the first rate cut that was being priced in for March. So them holding off on that, right, is still holding this market up. What we've seen is yesterday into the end of the session, we rallied pretty aggressively, and erased pretty much all the downside that we had, right, in a few minutes at that. So we'll talk about the S&P and the Nasdaq, and we'll look at a trade plan for that. But I want to talk about some of these semis. I want to talk about ARM a bit because we've seen. Let me just move this guy. Go to a daily chart here. We'll go to a. So let's go to ARM. So as we've seen, right, with ARM after earnings, we've drastically rallied, right? We're trying to hold up some of this bid here pre-market up again aggressively. So massive swings in stocks as we've come through the earnings period. A lot of excitement is returning to the markets over the past few months, and things are magnified on a general broader scale, with the Dow Jones tumbling more than 500 points yesterday in response to slightly hotter inflation data, as we saw. But single stock names have also drawn outsized attention for the whole reason, right? Robinhood was quick to comment on the rebound in trading activity in its last earnings, referencing a jump in monthly active users and accelerating deposits, because a lot of people are seeing things like ARM, they're seeing things like NVIDIA, what was it called? The microcomputers, geez, what was it called? MCI. Let me see if I got the ticker symbol right. Yeah, super microcomputers, SMCI, right? Just drastically jumping and jumping and jumping pre-market. They're on another rally. A lot of these accelerated names have been presenting a lot of opportunity, just buy calls, right? So some are queuing the old meme names of yesteryear, right? ARM Holdings, for example, on a massive roller coaster that hasn't stopped. Blockbuster rally following the earnings saw the stock actually rocket 100% in the past week alone, giving nearly 200% total return since its IPO in September. So generally, I obviously trade with caution and understand the risk behind these, but the valuation of ARM, if I'm not mistaken, is somewhere in the $50 billion marker, right? While revenue is, I think, in the millions at some point. So don't quote me on that, but there's a very, very big discrepancy between the actual value of ARM and what it produces. So after shares hit a new record high on ARM at 164, it dropped about 20% to about 120 on Tuesday alone, before restarting its engine on the overnight, rallying another 7% here pre-market. On a fundamental level, the latest catalyst for British chip designer were a rosy outlook that boosted the entire semiconductor sector, as well as record revenues and bottom line that exceeded expectations. AI was another magical word that helped trigger liftoff, right? CEO noted that it'll drive the need for more compute in a way that we've never seen before, and we're just at the beginning. So we'll see how that shapes up, but if you're an options trader, if you're generally looking at these stock swings, you can look at semis, right? NVIDIA, even AMD, a little more calmer than some of these. NVIDIA earnings are coming out next week, which present an opportunity for this thing to go just crazy ballistic even further. You might look at this and think, how much more could this possibly have? But on a good earnings period, right, the rally can continue very viciously. Look at Meta, right? Meta on a very strong upward swing over the past, 15 months. Earnings come out, they gap up very aggressively, now holding in this rotation at the highs off that earnings. So there's a lot of potential here at individual stock names that I think a lot of people should take note of. But going back into the markets, talking about the S&P 500 futures as well as the NASDAQ futures here to create some kind of a trade plan as we get ready for Valentine's Day, right? Oh my god, I completely missed that. Makes sense. So right now what we have, yesterday we had a very strong drop in the S&P 500 futures into the morning session, where we opened up below some of the key distributions. So when you're looking at the markets on a week-to-week, day-by-day basis, very important to understand where massive traders had accumulated prior, right? Maybe they got stuck, maybe there was massive bidding going on, right? Whatever the case might have been. But at around 05 to 08 on the S&P 500 futures, 5005, 5008, on the prior move, these rallies over here that came out last week, there was a lot of traders that were trapped on the short side, constantly trying to short into those lows, and eventually, right, spurred a 60-point rally to the upside. So the fact that we dropped aggressively under the level suggests that there was a lot of downside to be had, 20, 30 points expected, because there were so many sellers that were getting unstuck at that level. Another thing to notice is that yesterday we came into the distribution low under that 80, mid-80, 49.80-ish, and that area was expected to hold out as resistance based on all the volume that accumulated there, right? So we can stall out before we complete this auction, which caused a nice downward tumble. The peak at the lows yesterday was right at this low volume node into the distribution lows, into that mid-30 before we got this strong rocket. The fact that we closed back above the 56 on the S&P 500 futures suggests that this might be a little more of a bear trap, right? We've rallied on the overnight session. We did very well to hold that out. We're up like 25 handles from the overnight session alone on the S&P 500. And we could just as easily complete and run up higher. If the auction on the S&P 500 gets completed at 50.20, where that would make the final chance for the sell side to open up again, which is, right, quite a ways away. And realistically, we're in an area where these mid-80s would do well to catch a bid, so we can go up and see that 5,005 area, right? That 5,020, and see how these things shape up. So I am slightly bearish, right? Structure is changing a little here based on volume, but to confirm more aggression on the bear side, I would like to see an auction get completed to the upside before we start pulling back down. Now, if we take a look at the NASDAQ pretty strong as well. We've managed to hold out of that 670 kind of pivot area, and we're creating a lot of volume at this high, right at this low volume node, after the auction has been completely completed, right, if you will. So I'd like to see a little downside move, especially if we start getting under 760, under 730. That opens up the sell side. But right now, above this 770, it's a little more difficult to stay on the bears. So something to watch out for, something to note with NASDAQ this morning. So as we get ready for the morning session, right, I'm going to be looking for slight bulls to try to hold this out before the bears come in a little higher, is what I would say. 830 on NASDAQ, 825 is a strong area to see some of that sell pressure open up realistically if we don't just start selling from here, and that's one thing to note. As I look at this, I want to be very cautious about the bears, especially after what had happened on the close yesterday. That's not necessarily a super bearish close. The fact that we rebid through areas, back above areas where traders were once trapped on the short side, now, right, potentially that trap opens up yet again. So tread with caution on the bear side. We saw a strong downward day yesterday. A lot of people are going to be kind of shocked to see how this market rallied aggressively on the overnight. So if bears are going to come out, they're going to have to come out a little higher. I don't imagine them starting to open the sell right off the open, right? That's how I like to see it. So let's create the trade plan. Let's open up our live trading room to trade some futures. Maybe some options are going to be available, but mainly trading futures. We'll open that up. Check us out at TradeProAcademy.com, and don't forget, if you want more information on distribution, auction market theory, and the understanding of volume profiles,